Hey everybody, Tom with Tom Willard Trading, January 19th, 2019. How you doing? We've had some interesting market action. As customary, about 3 months I do another video, and it has been about 3 months since my last post on October 13th. So welcome back. Thanks for tuning in. As always, if you have questions, hit me up, Tom at TomWillardTrading.com, or just post in the comments. In fact, Riemann Abdul in the last video called January 9th, 2019, and he nailed it. So here I am with my video. And a very, very important time. We had a holiday weekend, so I had some extra time this weekend, so I thought I'd do this. And it's actually, I think, great timing because there's some good stuff that's going to happen here. You just got to be prepared. All right, so let's start with the big picture. The SPYs. Again, my normal setup, if you've been watching my videos, daily up here, weekly top right, lower left is the 60-minute, and then the 15-minute charts for the particular stock or symbol that I'm looking at. Right now we're looking at the SPY, okay? The S&P 500 spider right here, you can see it, okay? I drew a blue line here to show where this previous support level is, and you'll notice we've come right back up into that previous support level with a curling over moving average, looking like it's an ideal time to get short. Okay, we've had a really, really nice big run off this low that was set in on October 25th, I believe. Let's see here. I'm sorry, December 25th, right around Christmas, and we've rocketed right back up to these previous, the previous support area here, which, from a classic technical perspective, says look to get short, okay, but demand your setup or pattern. So let's take a look at the bigger picture here. I got the monthly of the SPY. And you notice this run we've had. So the first part of this is like July of 2010. You'll see we had a pretty big volume attempt to move lower here, held the ground, and we've been moving up steadily with very little volatility. 2012, 2013, 2014. Then in 2015, we got some hiccups here. Some crazy stuff went on, and in light of being in that situation, you remember there was a lot of volatility. It seemed, okay, but as you'll notice, nothing like what we've seen over the last 4-5 months. Not even close over the last many years, 8 years or so, right? We had basically a flat year from 2015, and then we started moving up. Look at 16, 17. I mean, just steady march higher. Not very exciting, not very big ranges on the months, just straight up. Then we started to get some hiccups here, early part of last year. And then, of course, in October, when I did my last video, actually, let me just move this back out of the way. Pull this back up, and this, so you can see it. It was right here after we had this big down candle here on the weekly chart. And so since I did that video, we've whipped down, back up, back down, back up, and then came ripping down. Here's the daily. And we've bounced back up. So now what? That's the big question, right? We get paid by making good calculated decisions, making calculated risk, taking calculated risks, and making decisions, and having a plan to take advantage of the movement in the markets. And right now, this is telling me you should be leaning to the short side. Okay. On the Qs, you'll notice the same QQQ. Okay. This support area here, right in this area here on the daily chart. We've come right back up to it here and popped into this piece right here. Okay, so we've kind of broken past that, but you'll see the curling moving average. Okay, this is a time to start looking short. Now, how do you do that? Or what approach should you do? Well, typically you look for a setup. Okay, some sort of candle that comes in and shows that the momentum may be changing. Right now, the momentum is up over the last many days. Okay, 4 weeks. It's been pretty much straight up, okay, and it's back up here at these resistance points and declining moving average. So now you need a setup to go lower. Some may have said, well, here when this gap down, we took out the candles, this low candle here, people could have gotten short in there, but then you would have gotten stopped out if you had your stop here. Okay, so the question is, A, when do you get in, and B, when do you have your stop, and C, of course, where do you put your targets? So we'll talk about that. So I just did my scan. I've got some specific ideas that I'm going to share with you that kind of go through the thought process behind these. So let's get started. All right, a couple of general comments, kind of a lesson first. Typically when you have a very sharp move like this and a subsequent sharp move back up, you can see that the trend is now moving to one that is down here on the SPYs. We've got a curling over moving average. Now, again, remember, this doesn't mean we can't go up and make new highs. Hence the need for stops, okay? I think I've shown over the last several months of putting up videos, I've shown positions that I've gotten stopped out at and kind of walked you through that, okay, as well as trades that have worked out really well. But you've got to take your stops. Just because something from a technical analysis perspective looks like it's trending now a new way, you can't just blindly keep adding on and tacking on and not adhering to your stops, because this thing we could go to all-time highs and just keep ripping. Who knows? Anything can happen. But right now, to me, the odds are that we look for a short setup in this situation. Now, I'm going to go through some long ideas too, because I think there's always something to buy in any market. There's always stuff that's outshining the rest that you can take advantage of. So I'll share a couple of those ideas I found today with you. So that being said, when you get a sharp move back up, typically, if you go through my course, my 10 series basic technical analysis course videos that are on my channel, and walk through those, I talk about patterns where patterns reverse. And typically, if you get any book on technical analysis, a lot of the patterns they talk about is when a candlestick violates the previous high or low of a candlestick, that means the trend could continue lower. So let's use this as an example. So let's start with this lesson real quick. Okay, today is, say, December 31st. You've got a move down. You've got downtrending moving averages. You've got a 200 that's starting to roll over. This is telling me and telling a classic technician time to look and lean short. Okay, are you with me? All right. So we got to move down. We got this retracement off this low, coming up to the declining moving average. Okay, not really up to the support area, which becomes resistance, which ideally you would love to see, or I prefer to see it come up and touch and kiss off that area. Okay, but it didn't. And if you notice, the very next candle, we actually gapped down. Okay, so technically, if you had an order to short, if it got below these candles, you would have been in, but then it engulfed. Okay, and it popped back up here. So not looking good for shorts. However, the next day, you'll see volume picked up a sniff. We gapped down, okay, and we came down and closed, forcefully lower here, below this candle, below this candle, below this candle. Declining moving average just off here. Classic technical book will tell you, or course will tell you, hey, this is okay. This is a good short pattern. Your stop is typically put right above this pivot high, okay? So in this particular case, high is what? 251.21, okay? So 251.21 and above would be your stop, and you target, the first target would be this low, this $235 area. We'll see how it worked out. The very next day, it gapped up near the open of the previous day, completely trapping these shorts, or people that got short or sold out, and went up and would have taken your stop out had you gotten short there. Okay? Now, you may say, well, let's go through the psychology of this thing, because I know students that have done this. They'll go, well, it's still below the declining moving average. Screw it. And here's the support area, which is going to be resistance at 260. I'd hate to get stopped out and just, I'm gonna double down on my position. Okay. All right. So now where's your stop when you do that, right? Well, you can say, well, I'm gonna put my stop up here. But now if your position was sized so that it was appropriate based on your risk for your trading account to stop out here, if you now all of a sudden arbitrarily move your stop out here just so you can stay in the trade and hopefully not be wrong yet, okay, you're going to be taking one hell of a large loss in your account. And that's not good. So let's continue. And up we go. And here we are today. So technically you could still be in this, okay? Now, what my point is that is a classic pattern. It failed. You should take your stop. You should just take your stop there. Okay, you would save yourself all of this pain. But now, as this comes up now to this resistance, this support area, which is now a resistance area from a classical technical definition, I am looking to get short. Am I going to look to get short at the very next candle that comes down underneath here? Maybe. Depends on what I see on that day. I prefer not to go short or long other than day trade. I day trade the SPYs and the Qs, along with a lot of other equities. But on my swing trades, which is what we're talking about here, we're not talking about day trading. Okay, we're not talking about day trading. We're talking about swing trading, holding for at least probably 3 to 5 days a week, upwards of 4 to 5 weeks to 2 months. Okay, is the target area I'm looking at. Okay. What you can do if you leg into positions, do scalp positions per se, is you can, since we are at this resistance area, now I'm not in this position at all, but I'm going to show you a position I'm in where I did this, and so far it's been successful. Um, that you can short this thing Tuesday when the market opens, wherever it opens in this area. Ideally, if it gaps up, even better, because you can see that the solid resistance point here is around 280, 281. You have one here about 270. You get this block of slop right here, but you get the declining moving average. The 200 or the 200 is actually down here. It came down to the 200, kissed off of it, came rocketing back up. Keeping in mind though that you want to be more loose. I'm going to tell you this: be more loose with your stops. Have stops, stick to them, but be more loose. Don't make it to the penny. Look at this here. If someone, the high of this candle here that I'm on, if you see it right there, is 281.15. This candle right here on the weekly chart. You'll notice we came down viciously, popped right back up, and this candle's high is 281.22. It took it out by 7 cents. And then it came down again and gapped up, right? Held the area, and then we came rocketing down. This is the kind of thing when you miss out on a trade like this because you got stopped out by 7 cents, it can make you do crazy things. Revenge. You know, funny thing, I was playing Madden with my son, and I got ahead of him in the game, and you know, it was a couple of turnovers, and next thing you know, I was up like 3-4 touchdowns, and I noticed he did something, and it made me pause for a second. Every single play he called after that was a Hail Mary. And it was like the second quarter, and he's throwing Hail Marys like nonstop because he's getting off his game plan. He's trying to get his money. And I was like, isn't that funny that we do this? Okay, well, novice traders or traders that are unsuccessful and think they're professionals have a habit of not following their plan. They have a couple of bad losses and they go completely, you know, crazy. They go absolutely nuts and they start not following their plan. Don't be throwing Hail Marys. If you get stopped out, take your stops. Okay. So this is one of those situations where you got stopped out at 7 cents. You may start, you know, especially if you're bearish on the market. Could you imagine you got short in this area here and now you're underwater and who knows what happens, right? But being fresh out of the market, looking to start legging maybe a third of a position short here, where a stop, if it actually gets up to 281, 282, and it stops you out, is palatable to you. It's totally fine. It's within your realm. Or you could even go smaller. Say a full-size position, whatever that is, with a stop that's up at 281, 282. Just take a third of that full-size position. So whatever that position is that you're comfortable with the stop, take a third of it. And just leg in as a short. Because right now, to me, the odds are is we're going to go back down. Okay. Now, I'm not doing this for this. I'm actually playing other things, and I'll show you some of them. But that's where you can do that, so you don't need to wait for a pattern. You're playing more support and resistance areas and declining moving average and banking on the trend changing, but knowing when to say when and get the hell out of Dodge when you need to. Good old Netflix. Okay, so another point I want to bring up, and I talk about this on all my videos, because I typically do them right before earnings season. Earnings season is now in session. Earnings are coming out, so make sure whatever positions you have, you know when earnings are. Now, I knew when Netflix's earnings were, okay? They were just the other day. And when this issue, now notice this, it was in the daily chart here, and here's the weekly chart. When it broke down here, and then it came rocketing back up, taking out anyone who had their stops here and here, I started to watch this thing. Kind of like, you know, the spies I was just talking about. Where are we at? So here was the previous support area. Well, ripped right through that. Here's the previous highs, okay, where the stop would be. And there is some resistance up here in the topping tail. So there's resistance in this 360-ish range, okay? 360 up to, let me pull up the 386, I'm sorry. 386 is the highs. So in the 380 range. All right, so on this particular day when it gapped up here in volume, I think this is the day, I believe, where they came out and said they were raising their rates on everybody. So it gapped up and it took out even more stops. And I thought, that's it. This is what I'm doing. I'm doing a small scalp position short. So I got short. And then I saw that I knew earnings was coming in a couple days. I said, you know, I'm going to take this. This is a very small position. It isn't going to hurt me, whatever it does. And I can add to the position if I want to. So let's fast forward. Next day, and then, of course, Friday, where in the aftermarket it was down in this 338, 339 area, and then it actually opened way back up here near the close. And then, as you can see here on the 15-minute chart, here's where it opened. After the close, it reported earnings and it was trading all in this range here if you were watching it, and then it opened the next morning here and just went straight down, came all the way back up, straight down. So I am shorting this thing. This is volumes here, and this is your This is your pattern in a sense, right? Where it comes up, you get short underneath the lows of these candles, and your stop is above 360. So now I have a line in the sand. I know where my stop is, 360 plus. Like right here, this high of this candle is 358.85, and my stop is going to be above that. Okay, I'm not going to tell you exactly where, but slightly above that, because I have a system where I put in a certain amount of cushion, above where the actual pivot point is. So you can get into this thing here, or you can anticipate it like I did, which is a little bit more dangerous. So I didn't do. I have a small position in this thing. Like I said, it could have gapped up, and it would have been fine. I didn't think it was going to gap up to 400, and if it gapped, even if it goes down, my first target on this thing. Okay, so now my stop is in place, like above 360. And if it comes up in this area, I may add to the position where it makes sense. I could add to the position tomorrow if it gets up. In fact, if it retraces back up in this 345 range here, I may add another piece to the position. But my stop is hard now above 360, and my target, if I look here, you'll see right here around $300 a share would be about a 50% retracement of this move back up. And I can see it going down there. Now, if the market starts to fall apart and things get, ugly, this thing I don't see having any problem going back down to the 240 range. And I'll trade it at, if things start to get ugly and this thing hits 300, I may take a portion of my position off, but not all of it, of my short, okay? So this is an example of what I talked about on the SPYs that I did with Netflix and where it's at right now. And again, we wake up on Tuesday, come to the market, this thing could be at $400 a share. Who knows, right? And if it does, what do you think I'm going to do? Take my stop, get out, move on. If it opens up at 300, I'll probably wait and see what happens. If it opens up at 300, it could go lower. I'm not going to get, that's my first target, but we'll see. And I have a small position, but I could also, sell half of that small position. Okay, it's still a substantial position in the grand scheme of things for me, from a dollar perspective, because it's a very expensive stock. So I may take a little bit off, but I have a thought process behind when this thing gaps down. I don't necessarily want to just jump in and say, oh, Christmas came, and it did. I want to get out right away. I'll watch it behave for the first 15 to 30 minutes typically, if not more. But if it's looking weaker and it's going to stay weak, then I'll try to ride this thing down, especially if something happens in the market where the general sentiment in the market is weak, it will help carry this thing down. Okay, so that's my Netflix situation. Here's another one. This one I am looking to get in the position here as this comes up, right? Here's the weekly chart of CCL. Beautiful move down. Came up. Here's the 200 moving average declining, right? 20, 50. And it's got support, which is now resistance in this area here around $56 a share. So watching for it to come up in this area and looking to get in this thing short. And obviously, your stop is going to be somewhere above this 58 area, or if you want to put it in larger, 62. Now, again, you can use larger stops, but that just means your position size needs to be smaller. And you need to make sure that whatever the target is typically around 3 times the size of what that stop is. So if you've got a $6 stop, you're going to want to look for about an $18 target. And if this thing gets in around $56, $18 will put you down to what, $38 a share. This thing bottomed at 46. I mean, you're going to be holding it for a while, most likely. Again, depending on what the market does. So again, what are we doing? We're just calculating risk, and we're taking small scalp positions, especially here, because that was another point I made on the SPYs, is when they come up rocketing like this, typically there's a lot of noise, meaning it'll go down and trigger a short, then it'll go up and trigger a stop, or trigger a long on a basing breakout. If you're thinking, okay, I want to go counter trend and play this base and buy this thing long here with a stop under here, okay, and just ride it for a few days up in this next resistance area. What happens is when they go like this, it gets whippy. It gets really whippy and it'll go up and down. And the highs and lows of candles from a, if you read classical technical analysis book, they put a lot of weight on these candles. They're candles, and they mean stuff. And battles are won and lost. And what I found is that it's not that black and white. The things that are going on, and using those as hard stops can be damaging to your account, because people know this, and I think they can go after it. So you need to be more ninja-like. Okay, with regards to, you have to have your stops and you have to have a line in the sand, but keep that to yourself. Figure out where that is, and it's in that general vicinity. And realize that when you get in this area, that's why I like doing this small position scout entries, because I can give it wiggle room. I can have a larger stop. I can add to the position as it approaches that stop if I'm still leaning that way. But then when it hits that stop area, I'm gathering all my shares and getting out and going to cash. Here's Yelp. Yelp has come down pretty hard, rolling over moving averages. Broke through the 200-day, through 200-day or 200-week period average here, like a knife through butter off this gap down. Right, just got clobbered. Been climbing its way back up. You can see here. All right, coming up right up to this resistance point around $38 a share. So I've got my eye on this. This thing gets up to 38. Okay, 39.40. I would look to get short on this thing, and your stop would be up in this area here. All right, or possibly if it gets up to 42, that gap fill. All right, again, market being, and it may just turn around, because if we get a market that starts to collapse, you could probably use this area here as your stop, the 38 plus, and look to get short on a significant power move to the downside. So a continuation type pattern. Again, I talk about these in the 10 videos on my site, on my channel. So I don't want to go through them here. But you got, if you miss the first bar, like on this Netflix, again, going back to this one, I can still add to the position down here at 320 with a new stop if I get a setup candlestick wise. Okay, so you would just do the same type of thing, where if you wanted to get in after the fact and it's showing it's got the power move to the down side, then you can obviously take those patterns. Right now, though, you can see it's kind of basing along here, creeping back up. I think earnings is coming up pretty soon. And again, any of these ones that you want to trade, make sure you know when earnings is, and then make your decisions. You can hold through earnings. I did on Netflix. And it's just totally up to you and your plan. You have to follow your plan. But you'll see the declining moving average here is lining up just right where that resistance point is too. That's why I'm liking this a lot as a short idea. So I'm watching this one. Yet another one, Capital One Financial. A lot of slop sideways, came down, broke down here, ripped through the 200 period moving average on the weekly like it wasn't there, well below it on the daily. And now we've come all the way back up. And look at this. I mean, if I draw a line here, there you go, right? Support, now resistance. It is literally right there with the declining moving averages just above it. Just broke back through this 200. You know, watch this thing. This is one of my top short ideas as well to look to get into in this area. But again, need a setup, need to watch it happen. I got to look up when. I'm not sure when this one reports. I'll look at that as well and factor all that in. But I just want to give you guys ideas of things that I'm looking at, so you can see what I'm looking at with regards to shorts. And I'll show you some long ideas too. But this is another short where technically this looks like in this area, it is a much better odds short. And you know, you can't go long. Really, there's two things right now. To be initiating long positions on something that's moved like this, coming up to this, it could work. Like I said, this thing could go ripping. It reports. Who knows? It could be a 110 next week. I don't know. But it's high. To me, this is a lower odds trade. This is an ill-advised trade, buying breakouts in downtrending stocks on the daily and weekly. Right now, because the weekly and daily are downtrending, you guys should be leaning short. I lean short, so I'm looking a way to get short on here. And if I'm wrong, I get stopped out. And on the short side, it is a lot more difficult than the long side I've found over the years of doing this. Long side, the pattern's usually cleaner. There's not as much craziness and volatility. On the short side, things will whip like crazy. So you gotta have a plan. That's why I do a lot more of this leg in type scout positions as opposed to jumping in with 2 feet, which I may do more on the long side on a pretty long setup. So even on the longs I'm going to share with you today, they're not, because of the status of the market and the fact that we're up the last 4 weeks in a row. Next week is not the time to start buying with both hands, guys. If you haven't been buying already off these lows, it's time to take those shares that you bought and sold, or anything you held on to that you sat through the pain and sleepless nights over this move down. Now you're back to even, or back to where you were before. You may have bought way the hell up here and been down anyway. This is where a lot of people, this is why the technical analysis works in general. Because now that you got this, oh, I got my money back. Or for the wimpier traders, right? They got short and they didn't take their profits, and now it's like, oh well, I'm not going to let a winner turn into a loser. So what are they doing? They're getting out of their positions right now because they don't want to have a loss. They'd rather break even or have a slight gain or have just a slight loss. So they won't even honor their stop. I find that's in fact, my day trading, I do a lot of that, where something will break down or break out, and when it retraces back to that entry point, I'm adding to the position or getting in for the first time if I missed it. Because a lot, it's again, all other things considered with the market and everything else at that particular time, but I find that the novice traders are the ones that are getting scared out because they don't want to take a loss. They can't. Losses to them are just a bruise to their ego. And they get out, and that's when that's when they start throwing Hail Marys, right? As I referred to earlier, because they get pissed off when this thing turns right around. So lean short, look in this area. I'll be watching this one closely as well. In fact, the list is endless. I got a ton of these that I can share with you. Let's do a couple more. Now Costco, this is a little bit different because I want to play the waiting game here, right? Let's draw the line. All right, there she is. So you'll see move down, creeping back up. This one, however, on the weekly is what? It's in an uptrend still, right? It's rolling over a little bit here on the lower time frames, but on the weekly, it's still an uptrend. So not as tasty to me as the one you want. If you have something in a downtrend, it's better, in my opinion, in general, than trying to short something like this. Okay, but the daily chart you can see is it broke through the 200 period moving average on the daily chart, and it's come back up here to the crossing mover. This is right in the sweet spot to get short. So I'm interested. Now, what do I want to see? Well, it's almost to that point, right here around 220-ish is where I think the sweet spot to short this. So I've actually got a note on my little weekly scan. I've got Costco, watch for a move. We get a nice strong day Tuesday, Wednesday. If this thing moves up to 220-ish, I'll put a scalp position in. And my stop would be up in this area here, right here. Okay, and as it moves up, okay, depending on when earnings are, again, a couple things you got to put together. Look at earnings too, but this looks like the start of a downtrend. And the earlier you get into an uptrend, the earlier phases of the uptrend and the earlier phases of the downtrend, they're more lucrative. But like I said before, and I want to say it again, the downtrends are a lot trickier and messier to trade. That's been my experience. The candles, they violate the highs and lows of one another. They don't respect the previous candles, if you will. Those highs and lows don't mean as much as they do typically on a stock that's in a nice clean uptrend. And the uptrends can be more. Now, uptrends can be sloppy too. Don't get me wrong, but I find that more downtrends are tougher to trade from that perspective. If you're more hard stop here, you have to have hard stops. But I say just give them some space beyond the actual candles that you see materializing on your screen and on your charts. All right, let's look at a couple long ideas here real quick. This one, Fabrinet. You'll see it's in a nice strong uptrend here. Daily chart's holding. It's got a couple of waivers where the slower period, shorter period moving average crossed over the longer one, but the 200 is moving up here. Here you go on the weekly. So if we get a nice move in the market, I think this is going to be a leader. You can see it's flagging here. It's got a nice support area in this area on the daily. You can look to buy this thing on a break above the flag, say right around here around 56-ish, with a stop right under here on these lows, which would be 53.5, right? 53 to 53.5 in that area. You get a lot of support in this area, okay? But this thing looks strong. It's a nice uptrend. No, it's not nice. See how sloppy it is? But it is definitely stronger than most, as you can clearly see. Intuitively obvious to the casual observer. VMware. This is one of those story stocks, right? This is one of the ones like when I used to own Tesla at 40, and I sold it at like 90, and then never got back in on a swing trade on that thing again. Or Amazon was another one where I owned it at, I can't remember, it was like 400 and sold it at 900, and I didn't really find another way to get on those. VMW is one that I used to own way back at the 40s, and wrote it up really nicely, tripled my money on it, and then never really found a way to get back on. And you can see it is pretty messy here on the weekly chart and on the daily chart. So again, to your plan, give it some space, but this thing is up here near highs in a market that just got crushed. Now the market's moved up over the last 4 weeks, and so has this, which is good. But you can see the damage from the down move in the markets. This one made a higher low, for God's sake, on the weekly. A lot of strength here. Keep it on your radar as a long idea. Coke. Coke here. Move right back down here to support. Bottoming tails like crazy. Uptrend on the weekly. Now the uptrend here on the daily is kind of rolling over a little bit. Okay, and it's sloppy. But again, in the grand scheme of things, this is a stronger one. If this would be one that I would be looking more toward the long side on if I get a setup. Couple of biotechs. In fact, I own this one. Oops, not that one. This one. I actually bought this one. I scooped it up down in this area right here. And I'm sorry, not down in this area right here, around 50, right here, off this move down. Notice the market was making new lows. This one was making new high or higher lows, and it came down to the support area. And I thought, you know what? I'm going to nibble in here. Got in, and it's moved up nicely. Now it's basing here on the daily chart, so I'm looking to add to the position. It is up 4 weeks. If this thing breaks out next week, I probably won't add to the position because I want at least another weekly candle here. But you've got literally 3, 6, 9 days where it's consolidated, and volume's been pretty light, and it's up near these highs. Watch this for a breakout. I'm looking to add to the position. I am in this one though, at around $50 a share, and it's looking like it wants to go higher, and it's strong, but it is god awfully ugly on that weekly chart, just heinous. That's Array Biopharma. Again, you know, market's making new lows. This one's holding this serve at this $13 range. It's really showing a nice floor. Watching it for a setup here, you got a high flag forming between $18 and $17 a share ish, right? It tried to go down that attempted to go down with the market, couldn't make a lower low, came right back up. It's kind of hovering here. In general, for all of 18, right? But for the last year, it's been trading between 20 and 13, and it's been just kind of hovering, consolidating, and holding. So I think this one's worth keeping on your radar as a possible long. Watch it for a setup. All right, lots of ideas today. Last one I'm going to show you here is this Codexis. Another one that's in a nice uptrend. You can see here on the weekly, beautiful. Daily is wavering a little bit, but this thing is making higher lows on the weekly, higher highs. It's in a nice uptrend. It did come down pretty sharply over this last this December. It looks like, yeah, December. But here, technically, it's setting up as a long idea with a stop under these lows. So right here around 17 and change, 17.50. Stop around, looks like $14 is 14 and change, or 14 is this pivot back here. So watch this one as a long idea, Codexis. Okay. All right. So what are the major takeaways from this video? Downtrends are a little more sloppy. Give them some room. Prepared to be jumping around. I like to use the concept of scalp positions more when I'm trading short on downtrends. There are long ideas that are definitely palatable for you to look at. There's always typically something that's moving on the top side, even if the market is coming down. So always look for that, and make sure that no matter what you do, so that you don't get into a situation where you want to throw Hail Marys in the first quarter. Take your stops, okay, long or short, whatever way you're going. When your stop gets hit, take it, get out. Then ideally you've lost what you anticipated your max loss would be for that, and it should be palatable. You should not be share sizing your trade so that if your stop gets hit, you're going to lose sleep. It should be, you should forget about it. Learn the lesson from it, okay? But forget about the money. You're not even worried about the money. Otherwise, your share size, your position size is too large. So you've got to find that where that is. Because the last thing you want to be doing is throwing Hail Marys in the first quarter. Okay? All right, guys. I hope you found this video useful, helpful. Feel free to comment. Let me know how it helped you. If you have any questions about anything, shoot me an email, tom@tomwheelertrading.com, or just post on the video. You guys have a good earnings season, and I'll see you next time.